why the recording didn't start. Okay, it did. So, welcome to the room again. I'm not going to show you any candles today. This presentation is not about any patterns or the Holy Grail, as the mail that we'll send you say. We're not going to teach you the Holy Grail. There's no Holy Grail in trading, really. And this presentation is based on a book I read, and I still read. This is my Bible, and I recommend it. I recommend all of you to read. This one is the Bible of trading for me. It's by Mark Douglas. It's Trading in the Zone. Again, you won't find any candlesticks or anything like that in that book. It's all about psychology. This trading is 95% psychological or mental game. Question number one that I always get people to ask me is trading for a living possible? I love that monkey. And that's how you look when you have no clue what you're doing. But if you have a little technical knowledge, if you have a trading plan, if you know what you're doing, means you took the education, you took the time, you invested the time and learned a little bit about trading, and trading is 100% possible. It is 100% possible, and you cannot convince me otherwise. I know people are very skeptical about it and say, you show me one person that makes money out of it. There's lots of people that makes money out of it, but there's more people that just cannot do it. And why they cannot do it, we're going to talk about it today and see if we can help you to change the way you think about trading. Okay. So what do you need in order to get started with trading? What do you need? It's nothing much. It's the easiest thing. You trade from home. You don't need an office. All you need is a working computer, and it doesn't have to be a monster of a computer. Any computer can handle it. It is software, right? So what you need is a little of a trading education. Any seminar, I'm not saying ours is the best, even though it is, but we teach gaps and gaps only. There's so many different styles of trading. Any trading education doesn't matter, but you need to have it. I don't think there's a way around it. I know people looking at YouTube and trying to get a freebie here, a freebie there, a free webinar, everything. I mean, it's fine, but I don't know anybody that succeeded in this without having the proper education. So after you get the education, what do you need? You have to have experience, okay? Usually, then that's something we cannot buy. And the first trading accounts we have are the biggest ones. We invest whatever we have, and we aim really high. And most of the time, we will get killed right at the beginning of our career, and that's fine. That's normal. And the last thing that you need, and the most important thing, is having the right mindset. Okay, having the right mindset, and that's what I call fix your brain. And as you can see here, you have to work hard. Look at the picture to the right. You have to work hard, never stop. Attitude is everything. You really need to want this, okay? And not just say, yeah, I need this. You need to want this. And if you want this, you will get this, okay? So what I'm going to talk about today is how can we fix our brain? How can we think differently about trading? What's the problem with trading? Let's say we get the education, right? Every trading school, and we are the same. Every trading school will teach you about the market, what is a buy order, what is a sell order, and they will teach you patterns, because that's what we do all day. We trade patterns. So if we trade patterns, our mind if you look at the image to the left here, our mind knows the patterns, and our mind knows exactly what's coming next. If you're looking at the image to the left, I don't have to give you what's next. You know exactly the pattern. You know what's the next line going to be, and the line after that. But when it gets to the patterns we deal with every day, okay, they look the same, okay, until there's a pattern that out of the blue looks different, and our mind doesn't understand why. We take one trade, it looks like this. Here's one trade. We have green, red, and green. Perfect. Then we have a green, red, and green. Our mind is expecting to have the same pattern because he's thinking patterns, and it's absolutely the right thing to do. But what happens when we have something that doesn't make sense to our brain anymore? Okay, we learn this pattern and we know it should look like 1, 2, 3, and now it looks different. So we are not consistently successful because of the way we think about those patterns. For us, the pattern has to look the same every time. For example, today we took a trade in the room. It was a beautiful thing. And I know every time I look at this trade and look at that setup, I know that the target is low of the day. And most of the time we will get there. Today, with the same exact pattern, we didn't. We just got paid just a tiny bit, and oops, we got stopped out as a break even. It doesn't matter, but they don't all look the same, okay? And our brain, our mind is thinking they have to look the same because it is a pattern. A pattern, yes, but in trading, it doesn't have to look the same. And then when it doesn't look the same, what do we do? What comes in? The fear, okay? So I expected something and now I get something else. My brain is telling me, now you're going to expect this pattern to work, and it doesn't. The trade goes the other way. And then the 4 major fears are coming in. 1, the fear of being wrong. We hate being wrong. Nobody likes to be wrong. Nobody. Okay? In your personal life, professional life, you don't like to be wrong. And then you press the button and the position goes against you, and your mind is already thinking, how can I not be wrong here? And that's killing the trade too early, obviously. Or we don't like losing money. That's the second fear. If it goes against us, so we are going to be wrong. That's number 1. And then we're going to lose money. That's number 2. We don't like that. The next fear is the fear of missing out. There's something I called something, or I didn't call something, or you sit there and you see something that is already moved in your direction, and the direction you thought it will move, and then you jump in, or you have the fear of missing out. And the last fear that Douglas is talking about in his book, and that's the fear of leaving money on the table. We don't like that. Okay, so these are the 4 major fears. So how do we deal with that? Okay, first of all, you need to find the source of the fear. Okay, you need to ask yourself, what am I afraid of? I would start with, what are you afraid the most? And then once you ask yourself, what are you afraid of, and you know the answer, find the source of the fear. Why are you so afraid of it? And I'll tell you one thing, most people afraid about the market. Okay, for example, this is a little chart. I don't know if you can see. This is today's chart from the SPY. Okay, so people, when they see a candle like this, fear comes in. They open the door for fears. You have to understand that the market doesn't know you, doesn't care about you, doesn't know your families, doesn't know your kids. It doesn't. The market just tells you what others are doing. Okay, there's some people thinking it's going to go higher, so they buy it. Some people think it's going to go lower. And what you see on the chart, it's just the behavior of other people trading. There's nobody is fighting you. Okay, if you're fighting somebody, it's yourself. So you look at the market, okay, and you expect something. You expect a pattern. When the pattern is not created, okay, when the pattern you're expecting is not created, then the fear come in, okay? So what we do here when we look at the market chart, we define, okay, and we give our own interpretation to the market information, okay? But you have to understand the market, it doesn't care about nothing. It's just showing you what others are thinking, okay? And then when it's not doing what we think it's going to do, then Douglas say we have some kind of a mechanism. He called it pain avoidance mechanism. So we start, for example, if you take a trade and it doesn't work, I mean, it goes against you, you start the pain mechanism and you start coming up with reasons why it should work, or every good tick in your favor, it makes you feel better just for a split second. Okay, so that's our mechanism, and it's auto, you cannot stop it. It kicks in. Okay, every time something doesn't work against you, goes against you, the mechanism start to work. You have to understand that the patterns are patterns in the other world and not in the trading world. They don't have to look the same. That's one thing. And the market, you don't really, basically, you don't need to know what the market is going to do next in order to make money. Okay, so we're going to talk about it a little more. So there's easy fixes for the fears. What are the easy fixes for a fear? So position size. So what you need to do is, I always say, you need to use the right position size. So if you're willing to risk $100 per trade, you shouldn't take more shares that will cause a bigger loss. Okay, so 10 cents of a risk, I know I'm going to take only 1,000 shares, and that will make me lose $100. You have to be willing to lose that amount of money before you enter any trade. Okay, so position size for me is the key, guys. And today, for example, we had something with a 20-cent spread that looked amazing. I mean, the pattern was there, the daily was there, everything looked right. The 20-cent spread, I typed in the room, not for me. No, I even said it was before the break. I said, I'm not playing this. Okay, I'm staying out of this. So I don't oversize my positions. I don't trade volatile stocks. Always, I make sure the spread is between 1 to 5 or 7 cents. And my rule is telling me use limits. Do not pay market what it wants to get from you. Okay, so I use limit orders. So these things, this is the easy fix, really. Position size, make a table, put it on your desk, and every time you see a risk or you see a 5 cents risk, look down and see how many shares you're supposed to take. Don't take less, don't take more. Take the same amount that the chart tells you. So do not stay away from volatile stocks. Okay, risking too much on a single trade. If you have a $2,000 account, you cannot afford yourself to lose $500 on a trade. You cannot afford to lose $300 on a trade. Okay, and some people, and you know Murphy's law, right? When you take too many shares, most likely it will not work. When we take, I'm going to just try 100 shares or take half the size, guess what? It's going to work big for you. So I always take the same size. Okay, so it has to do with the account size. I know if you have an account with Logix, it's a 30-to-1 margin. You cannot use that margin to calculate your R size. If you have a $2,000 account, you need to have, I would say, not more than $50, 2% of that account. Okay. Do not forget about the buying power. Buying power just there to help you. I can give you as much buying power as you need, but you really need to share size it correctly. You cannot lose too much on a single trade and on a single day. Jump the gun, I have a rule. I never jump in with the market order. I enter all my trades with the stop limit order, and I know exactly, I plan all of them. So I never jump on moving train. And leaving money on the table, you need to have money management rules as far as profit taking. So for me, for example, or for us, when I take a trade we took a trade with a 25 cents risk this afternoon. I know that 50 cents is target one. I have a set of rules, and I do the same thing again and again every single day. I don't change it because it's a Monday. I don't change it, for example, today because the market was ballistic and moved higher. We stayed in the trade, we moved the stop as per the plan. Nothing changes. Okay, so again, you have the 4 fears that you have to deal with. You have to start avoiding, it's not the right word, avoiding. You cannot really avoid the market, but you have to understand you don't need to know where the market is going to go next in order to make money. And he says that in a book many times. Many times you don't need to know. Okay, it doesn't matter. I remember a few weeks ago I watched a YouTube movie of a guy saying, from here we're going to crash, market is going to go lower and lower. This is only the beginning. And that was February 9th. And since that day, the market moved higher every day. Okay, did I make more money off of that? No. This guy, obviously, you don't hear from him anymore. I mean, he didn't comment on the video. He was smart for one day, but I don't really care. I don't watch those movies anymore. I avoid them. I don't care. I open the platform in the morning. I look at the market chart, and I know this is my bias for today. Maybe higher, maybe lower. I have an idea of what the market might do, but I don't really care. And I say that every morning in the room. But those things, these are the easy. I know it's these are the easiest things to fix. Sit with yourself, set a position size, risk always the same R. Do not touch volatile stocks. Okay, don't risk too much on a single trade. Share size it correctly according to your account size. These are the easy fixes. So think different. So he is talking about state of mind. Okay, so we talked about the market and how the market is doing its thing. We don't care about the market. And what we need to do is we need to be in a state of mind, in our state of mind. And that's from the book. It's our state of mind that makes the truth of whatever we're perceiving outside of us. So if I'm here, okay, and I'm totally mad this morning because a dog bit me or something happened to me this morning, this will be affecting my trading. Is going to be affecting the way I look at the market today. You need to start the day when you're absolutely 100% calm. If you're not, if you're tense, if you're shaking, if you had a bad morning, I don't know, whatever, maybe you should take the day off, okay? But state of mind, you need to be 100% relaxed and ready for the trading day, okay? And consistency, I don't know if you read the article I sent a few weeks ago about consistency. If you want to be consistent, that's one of the main ingredients, okay? You need to be really objective, okay? And you need to have an objective state of mind. Objective means don't come, if you listen to a YouTube guy that's saying that the market is going to go higher, this will affect you also. Okay, so I absolutely isolate myself. I come here, I enter my zone, my state of mind, and consistency will be a result of that. You cannot really aim to be consistent. You cannot do that. You will become consistent trader if you do this. Okay, you will not feel any fear. Okay, look what it says here. You won't feel any fear. You will not hesitate. When you see a pattern, you will just, how did I say it? When you have to shoot, shoot. When you see a pattern, it's in your trading plan. You have to press the button. It's your job. Okay, so state of mind is a key to consistency. And remember, here it comes again, eliminate the potential to define the market information, okay? Don't give it, I mean, you look at the market, I know it's hard to, it's easy said than done, and you cannot really ignore the market, but you just have to remember, market is not against you. Market just showing information. That's all it is. There was a time I didn't even look at the market charts back in the days, but market, I'm using the market for reversal time and to time my entries and my exits. And I cannot tell you I'm right or wrong about the market and what's the percentage of being right and wrong. It doesn't really matter. I don't care what the market is going to do. Okay, I really don't care. Here, the market today was a monster market and moved higher all day. Did I enjoy this move? No. Did others? Maybe. Who cares? I stayed in my zone. I looked for my entries. And if I saw something that I had to take, I did. So what do you need to know? All you need to know is what you need to have. You need to have a trading plan. We talked about this many times in the past, but you need to know that you have a system which puts the odds in your favor. Okay, so my system is gaps. Your system can be breakouts. You need to have some kind of a system, and it doesn't matter what kind, really. I'm not trying to sell you a gapping system. For me, the edge for me is gaps. Okay, so this is one thing. So once you have a trading system in place, then you move on to the next one. How much it's going to cost me to find out if the trade is working or not? And that means that's what we talked about 2 slides ago. How much are you going to risk per trade? Okay, and you need to reach the amount that you are good with. Means it's when you press that button, if your heart is uh, coming out of your chest, that means you're risking too much. So just set a number that you will be comfortable, I hate to say, comfortable losing, okay? But it needs to be an amount that you will not take you out of your state of mind. Remember to a slide ago, you need to stay in a good state of mind. You need to be relaxed, you need to be calm, you need to stop worry about what the market is going to do. So you have a trading system. You know exactly how much you're going to spend on the trade, obviously, if it's not going to work. And number three, here we go again. You don't need to know what's going to happen next in order to make money on that trade. Okay. So what it says here, random distribution between wins and losses. Let's say I know my betting average is a 50% or 60%. Okay. It's not bad. I mean, if you manage a trade right with 60%, you can make money on the month. But if you have a 60% betting average, you took a trade, it didn't work. You took another trade, it didn't work. You took another trade, it didn't work. It doesn't mean they're not in the right order. I mean, eventually we lead the first winner, but you can have a losing streak. So you cannot really tell if you lost 4 in a row and now you know out of the 10 trades, now the next 6 will be winners. It doesn't work like that. It works like that in the long run, okay? But not on a single day or not a single week. You should know what's your betting average after a month or two. You should know where you stand. So you don't need to know what's going to happen next. And you have to know that anything can happen. Means we took a trade this afternoon, we entered, we have a target, and we have a stop. Anything can happen. I can either get my stop hit first, I can get to target 1, I can go down to target 3, I can get stopped out with slippage. Anything can happen. You need to know that. And if you share size it correctly, the worst case scenario, if everything goes wrong, all you're going to lose is one risk unit, 1R, what we call. So if you wanted to lose $100 on a trade, you will lose $100 on a trade. That's the worst case scenario. Okay. So what information could the market generate about itself and would cause you pain? Okay. No information. The answer is no information. Market can do whatever it wants. Market can jump like crazy today, and it did. It bounced. We never get a pullback. I don't care. Market cannot cause me pain anymore. You should do the same thing. Stop overlook that market. Okay? Stop thinking about the market all day. Focus on your trading system. Focus on your setups. Focus on your risk management during the day. Stop looking at the market too much. Refine your trading activities. So in a way that allows you to completely accept the risk. You need to accept the risk. You need to know that once you press that button, that's it. The money might be not yours anymore. Okay? So he says that's the most important skill you can learn. Accept the risk. Okay? That's how successful traders think. They get into something, they know exactly what are they going to lose if it's not going to work. Okay? And he says here, when you trade a trading skill of risk acceptance, the market will not be able to generate information that you define or interpret as painful. Okay, and I read this book many times, and every time I read it, I get it more and more. So again, as a novice trader, I was a little bored of this, and I say, okay, where's the Holy Grail? Where's the pattern? And then I didn't get any patterns from this book, so I moved on. Then I came back and realized trading is 95% psychology. And as I said, this book is my Holy Grail of trading. Okay. So if the information that the market generates doesn't have a potential to cause you emotional pain, there's nothing to avoid. You don't need to avoid any fears or any bad thoughts you have on a single trade, on a day. It's just information telling you what the possibilities are. Okay, but remember, anything can happen. And what's the worst case scenario? You will lose 1R. That's all. Consistency. We talked about it, or I sent a newsletter about this a few weeks ago. And I called it the recipe for consistency. And usually when you tell it to someone, oh, I have the recipe for consistency, what do they expect? They expect to see a pattern or show me what do you trade. Oh, you trade gaps. Show me what do you do exactly. How are you consistent? Consistency is not something that you can buy or you cannot aim for it. It will become part of you. Okay. So the recipe for consistency, you need to identify an edge. Again, gap trading, futures, whatever, or Forex, whatever, but you need to have an edge. Once you have an edge, you need to define the risk. And remember, a single trade and a day. For me, I don't like to lose more than 3 hours on a single day. So if I took one trade, didn't work, second trade didn't work, on the third, I'm probably going to start with half the size. It didn't work, called it a day. I'm not going to push it. So you need to have money management rules for a trade. It's more important to have it for a trade and then for the day. And you need to accept the risk. Number three, you need to accept the risk. And that's a number one, novice mistake. You have to be willing to let go of the trade if it doesn't work. And for me, I put the stops in the system, and if it doesn't work and the stop hit, I'm out of the trade. I don't want to look at it. I don't want to think about it. I know that's what the platform is there for, and that's where the stop is, to protect me. And if I'm here, I don't need to start thinking, do I need to get out? Should I get out? Should I wait a little more? So that's absolutely a must. You need to cut the trade when it's not working. Okay. You need to act. Number four, you need to act on your edges without reservation or hesitation. I know when we're coming from a losing trade, when we come from a second losing trade, then you look at the pattern that you are very familiar and you love, but you hesitate. You think about it. Should I? It's been this kind of day. Is it that kind of day? So what you need to do, this is when you have to shoot. When you see something that is in your trading plan, you have to press that button. You have to. That's your job. Okay. 1 second. Okay, I pay myself as the market makes money available to me. That's number four and five are pretty much the same. When you have to shoot. When you see a trade, everything's right, aligned with the market, you timed it with the market, it's 10 o'clock or 10:30 reverse time, you have to press that button. And number six is monitor your results basically. Okay, if you made a mistake, that's okay. We all make mistakes. I can tell you I make very, very little mistake after so many years of trading. Very, very little mistakes. I can make stupid mistakes like selling too many if I have 1,000 shares, or I can sell a little more. Really stupid mistakes, but I don't make trading errors. Means I don't take patterns that I'm not supposed to, and I don't jump to moving trains. Okay, so you have to monitor. If you made a mistake, you have to sit down the other day and say, okay, I will not do it again. Take a picture of it and move on. And number seven is the one that's putting everything together. You really have to follow those rules. You want to be consistent? I'm telling you, it's very easy to be consistent. You don't stop aiming for consistency. And consistency for new traders is something else. For new traders, consistency is having a winning trade and another winning trade, and then after that, another winning trade. And I know many people tell me, oh, this is a 7th day in a row that I'm a winner. So what? It doesn't mean anything. And then comes one day and they take everything. I mean, market takes everything back. So consistency is not about a winning day, 2 days, 5 winning. It doesn't really matter. Consistency in behavior. Okay. So coming in the morning, you have the right state of mind. You know the edge. You know how much you're risking per trade. You accept the risk when you get in. You act when you see something. You have to press the button. You press the button. You don't hesitate. Okay, if you made a mistake, you monitor it, and then you just have to do the same thing again and again. Never violate any of these rules. Okay, again, I gave you the easy fixes. Work on your share size, and I can go back to that slide. That's the easy fix. What I'm showing you here, it's more of the mental side of trading. Okay. So what do you do now? I put that Control Alt Delete. If you don't know, that's If you're on Windows, you should know what Control Alt Delete. So you want to erase a program that runs in the background or erase a task. That's the buttons you use. So I know you're coming from a few weeks, months, years of experience, okay, in trading, and you have thoughts like losing money is bad and trading is gambling. That's what the family tells you and your friend and your friends, and you're embarrassed to lose. You don't like to lose, and you need to go get back the money from your losing trades, and you need to win on every trade. And when you take in a losing trade or a day, you're feeling bad. Today I'm down on the day. Believe me, I have no problem with that. Yesterday I was down on the day. I have no problem with that. Friday I was down on the day, and I have no problem with that. Okay, so those thoughts are the old you. You have to learn how to delete them. Okay, and how? I gave you the tools. Start working on yourselves. Forget about more charts, another signal or another pattern. It's not that. There's nothing to do with that. It's all in you. The solution is in you. So erase those old bad, these are really bad thoughts for you if you're a trader. Okay, so stop looking for more information about what is the market going to do next. Believe me, I know people that every night they go and search YouTube movies and more newsletter about the market. I never sent a newsletter saying here is the market and that's where it's going next. And think positive. Here, take the I am from the impossible word. Trading is possible, and it really depends on you. And what's stopping you in your trading, and if you're a novice trader, is fear. Okay, remember the four fears that I mentioned, four major fears, and how you can avoid those fears. You have to trade stress-free. You have to trade fear-free. You have to stay in the zone. Okay, and staying in the zone means have an edge. Okay, and all those things we talked about, and have a trading system that works. And again, you don't have to be right 100% of the time or 50. Or I knew a guy in this room that had a month with 30% betting average and still had a winning month. Okay. Ask yourself, how much fear is in your trading? If this is what you're having, okay, you're doing something wrong. Okay. And you cannot trade stress-free and stay in the zone, not with this amount of fear. I cannot tell you I am 100% fear-free, or you can say 95, okay? But even this piece of the pie is too big for fear to be involved in your trading. So again, I'm going to go back to this slide. All you need to know, you need to have a system, the odds in your favor, like any casino. All casinos makes money. You know that. The odds are in their favor. Okay, they set the rule. You can set your own rules to keep the odds in your favor. Remember, you have to know how much you're going to risk on every trade. You have to accept the risk, okay? And you have to always think that you don't need to know what's going to happen next in order to make money. Anything can happen, okay? And if you'll do that, try to do it for a few days. Lower your risk. That's the first thing I recommend. Whoever comes to me and I'm teaching or not teaching, lower your risk. Okay, people are aiming for the money, and when you aim for the money, guess what? You get nothing. You give your money. So, and ask yourself, how much fear is in your trading, and what are you going to do to reduce it? And that's what I had to tell you today. Just a little presentation.